Alright, what's going on, you guys? It's Royce Jacob. Welcome back to the channel and welcome back to Trading Week Recap, series I post every Friday where we reflect on the past trading week. We'll take a look at a few stocks and asset classes that I personally believe define the week, and we'll just talk some shop. So, as always, we'll go over each topic that we're going to be discussing, then we'll dive into each one individually. In front of us, as always, you guys know the drill at this point, Trading View, where we have a whole lot of charts to look at today. Definitely going to be focusing more on the technicals today. I will release a video tomorrow covering some of the more fundamental reasons that I'm bearish on the equity markets. I just want to get that just out there as soon as possible. So you guys, I am bearish on the equity markets right now. I do believe that we have some bloodshed in the future, in the near future, that is. So we'll focus on the technicals today, focus on the fundamentals tomorrow. But that said, have a lot of different asset classes to look at with you guys today. So I'm excited about that. That said, I do have one piece of news that I want to cover with you guys. As the market's facing a notoriously rough month, Jim Cramer says it's good to have some cash. All right, so Jim Cramer, Mr. Mad Money himself, you guys may have heard of him, may recognize him. I have referenced him on this channel a few times in the past. Agree with some of the things he says, definitely disagree with some of the things he says, but I do agree with what he had to say today in this article. So we will go over a few key points here, and he also listed 5 reasons why, if you're an investor in this current market, you might want to be cautious being on the buying side right now. Okay, so I agree with every single one of these points. We'll read these together, and I'll just kind of riff about some of my thoughts regarding these points. Okay, so we will cover this. That is the one article we will cover, just surrounding kind of the macroeconomic environment, but it's very relevant to you guys, to any investors, traders out there, anyone involved with the markets. Okay, so I thought this was important to cover today. We will, as always, kick this video off though by reading with you guys the newsletter that I sent out this morning. Okay, so again, I do send one of these bad boys out every trading day during market hours, and I like reading these at the trading week, in the trading week recap videos, because I pretty much, it's literally just me summing up my current thoughts on the market environment as a whole. Okay, so it's just kind of an easy way for me to intro this video and get across some of my thoughts to you guys. All right, so let's kick it off here and right now. Volatile day in the markets. You'll love to see it. I'm just going to say this straight up, guys. I have a strong feeling that tomorrow will be a bloody one. The fact that the markets kicked off the morning significantly green, yet have broken down over the course of the day, is a direct sign of weakness in my eyes. When you see weakness, you capitalize. On top of the weakness we're seeing today, tomorrow is Friday. As I've said in the past, Friday tends to be the most volatile day of the week, considering the shorter-term traders don't want to hold their positions over the weekend. Considering the majority of new retail investors are day trading and haven't truly seen blood yet, I believe that we will experience the perfect storm of weak-handedness to initiate a significant pullback in the equity markets. So again, wave 2, you guys, I do believe there's a second significant pullback coming in the equity markets. As you can see in the chart I've attached below, I believe we will see a short-term pullback on the SPX to the $3,200 region. After that, I believe we'll see a slight bounce, then go on to continue the greater correction, ultimately to the $3,000 level. I'm sure you guys can already assume what I'm doing today, capitalizing on puts and volatility. Exciting times, guys. Let's get down to business. So again, you guys, I'm not going to read this whole thing with you guys out of respect for my subscribers, but if you do want one of these in your newsletter every morning and literally know exactly how I'm personally trading this the entire market right now, all call options, put options, stock positions, cryptocurrencies, literally everything, as well as get one of the newsletters that looks exactly like this in your email, please check out my complete portfolio daily newsletter, first link in the description if you're interested. If not, no worries at all. And yeah, let's get into it. Before we get into it though, please, one more thing, like the video. If you're invested in any of the stocks we're talking about today, or if you gain any value from this, subscribe to the channel if you're new around here, and please help me get to 20K down there. All right, so that said, let's get straight into it. SPX, S&P 500, you guys know that's how we kick it off. We will take a look at the Dow and the NASDAQ today, though, for the first time. I don't usually look at those. So I pretty much summed up my thoughts surrounding the S&P, you guys. This is the primary index I look at personally. So I do think that we have breaking down here. So this is what's very bearish. We are looking at the daily time frames here. This is very bearish to me. Okay, so we broke down below this line of support that we set over the course of this rally. So a few days ago, when we first saw that, like right after we saw those significant pullbacks, we broke this line of support. Okay, we then tried to reclaim it, so that makes perfect sense that we bounced a little bit off of it, but the bulls failed to reclaim that uptrend, and we are now, like on 2 daily candles, we have now closed below this line of support, and we are now technically in a downtrend. So this this applies similarly to all the indices, you guys. I always say that. So S&P, Dow Jones, NASDAQ, Russell 2000, whatever you guys may be looking at, they're all fairly similar just because they're a conglomerate of a bunch of huge stocks. Okay, so we are technically in a downtrend right now. We will have to significantly break above this downtrend right here for me to even think that we're not just going to completely tank. But you guys, to be completely honest, I do think that we're going to come down here, retest this previous high. You guys know the deal. Like previous highs act as a significant line of support on the way back down. And I think that it's very likely for us to come down to these levels over here, which was ultimately previous highs back before the significant rally. So back in like this time last year, which the economy was undoubtedly in a better place this time last year, seems reasonable. So against like similar concept, previous highs become new support. Okay, so I think that ultimately we will see a correction down to these levels. That's at least my short to medium term price target. So again, you guys, a very similar thing applies to what you can see here on the Dow. The Dow also broke this line of support, pretty strong line of support here, and I do believe that we will see another move down. So for the Dow, because it's a little less volatile than the S&P, there's more kind of legacy players involved in the Dow. It would make sense to come down not too far, maybe around like the 2650 level, just like ballparking this. We did spend a lot of time around here. Yeah, I would say like 2600 is a pretty fair estimate if we see a pullback in the Dow, just eyeballing that. Let's move on to the NASDAQ. So NASDAQ, you guys, very similar thing. NASDAQ has ripped harder than any of the other equity indices, so I'm more bearish, honestly, specifically on the NASDAQ than any others. I think this is an easy pullback, very easy pullback. I think it's almost inevitable that we pull back to the 120 region, so not too much, a few more percent. But again, you guys, the NASDAQ has ripped so much harder than many of the other indices that I believe that the pullback will be significantly greater. Again, you guys, just previous highs this time last year. Around this time last year, we set two highs here, the 105 level. I think a pullback on the NASDAQ to 105 makes perfect sense. All right, so NDAQ, I'm sorry. Specifically, NASDAQ's exact same thing applies. Let's move on to the VIX, which is probably the play that I'm personally the most excited about right now. So you guys, the VIX, we know what this thing can do. We've seen what it can do in the liquidity crisis we saw back in March. Absolutely popped up to 85. It is currently floating around 30, so it's seen like a full-on 70% correction. You guys, once again, I built my career off playing bubbles. After a 70%, a lot of times 70-75% is at the steep end of a full correction, and after you see that full correction, you'll see it's very common that you'll see at least somewhat of a bounce to maybe the middle region of the previous highs, of that initial high. Okay, so I wouldn't be surprised in the least, considering VIX did hit 85 at one point, to see it come back up to like 40 to 45. And trust me, you guys, I'm playing these myself. I have SPX, or not specifically SPX puts. I will say that I'm shorting the S&P 500 with certain ETFs, and I've many call options on a certain VIX ETF as well. Okay, so I'm very excited about the VIX. This is probably one of the few plays in my portfolio that I'm currently the most bullish on, and I'm excited to see where this goes, because I feel like, especially with the election coming up, you guys, there's so much just geopolitical, macroeconomic uncertainty, and we have the election. Like, there's so much, all the stars are aligning perfectly poorly, like perfectly wrong for the markets to do well right now and for VIX to do good. You guys, the volatility index was literally built as a hedge to traditional equity markets, to the S&P specifically. So, I mean, S&P goes down, VIX goes up. That's how it rolls, and I'm excited to see where this goes. Okay, so VIX, very excited about that. We'll talk to you guys more about that in the future. Bitcoin is very interesting. So the interesting thing to me about Bitcoin right now is that it is slightly kind of breaking correlation to the equity indices, which is very bullish for me. That's the one thing I need. Like, I really need to see it significantly break correlation. It was up, so it literally just recycled. So TradingView recycles around 2:30, like 3 o'clock my time. I should know exactly when that is, but it just recycled like half an hour or so ago. So it is down a little bit today, but on the day, actually in the last 24 hours, Bitcoin is up a couple percent, while all the equity indices fell earlier today as well. So while the equity indices were up, Bitcoin was up, and that is exactly what I need to see to become very confident on Bitcoin. Because what worries me is if Bitcoin, like in March, when it was a liquidity crisis, like I said, everyone wants liquid, everyone wants dollars, okay? And we will cover the DXY tomorrow, which is the United States dollar index, which is very important as well, but I'll explain that tomorrow. when there's a liquidity crisis, everyone wants dollars. So even assets like Bitcoin that were traditionally uncorrelated to the S&P, even gold, silver, like very historic safe haven assets fell during that liquidity crisis because everyone wants dollars. And since that happened, Bitcoin has shown correlation to the equity markets. I'm gonna need to see that break for me to be very bullish on Bitcoin, as well as some of the stocks associated with Bitcoin, which we will touch on today as well. But Bitcoin, it is really using this strong line. So the 10.4 region, the $10,400 region, has always for such a long time acted as a significant as a significant ceiling for Bitcoin, as a significant line of resistance. And it really, you can see that it's been going sideways for the past week now, just struggling to get above the 10.4 region. If we can close a daily candle above, I would say where we would have to get back up into this region. If we close, I'm not going to be bullish personally until we can reclaim at least 11.1. Okay, so I really want to see us fall back into this rising channel that we've set, and maybe bounce off that. But if we can get back above this cyan line or whatever color that is, I think that makes me bullish on Bitcoin. Actually, no, to be honest, we'd have to get back, but we'd have to break this current downtrend. So we have set a downtrend since the mid-August highs. We would have to break above 11.4. So if we can close a daily candle above 11.5, and obviously, you guys, the further this goes, the more, the lower the price range gets, just because it's declining. So you guys, okay, I'll just say this: a close above 11.4 makes me very bullish on Bitcoin. Okay, so I'll say that right now. But again, you guys, it does have to break correlation with the equity markets. We'll see what happens there. ETH, looking pretty good as well. So if we zoom out on ETH, ETH is just absolutely ripped. ETH looks pretty good right now. So ETH is using this line, which is a pretty strong trend line that has been drawing since those lows back in March. And you can see here that it's closed. It's almost perfectly closed on this trend line. So this is a strong line of support in my mind. If Ether breaks down below this line of support, I would look for a pullback to use its ultimate lower line of support. But if we can go back up, it wouldn't surprise me at all to see Ether continue rallying and even make new highs. But again, you guys, this is very dependent on the success of Bitcoin, and if the cryptocurrency sector as a whole can break correlation to the equity markets, which again, it did today. So that's very promising. We'll just have to see if it continues. It's a little too early for me to say anything with any significant sense of certainty. Okay, so that's fun. Not going to look at any of the other cryptos, just going to look at those two today. Let's quickly move on to Overstock and Riot, and then we'll move on to Tesla, Nikola, and Moderna as well. Okay, so Overstock. You can see Overstock saw a significant correction here, and you guys, I'm still not comfortable buying Overstock at these levels. I do ultimately think, just to be honest, I do still hold some Overstock. I'm going to be completely honest, just because it's such a long-term holding of mine. I did sell a good amount of my position. I timed that pretty well. It's rare that I time things perfectly, but I timed I reduced my position significantly, almost perfectly, for Overstock. So I'm very glad about that. I do still hold a little, but I'm waiting to buy more probably until we see a pullback all the way back down to the $50 region. So I think ultimately we will probably come back to those highs where it spent a lot of time around early July prior to really exploding. It wouldn't surprise me to come back down to those regions. If Overstock reaches the $50 level, I'm very confident as a buyer there. Okay, so that's Overstock. Let's move on to Riot. Riot, once again, still in a downtrend. Really, Riot is just, it's bumming me out that Riot is seeing more correlation to equities than Bitcoin, which it makes sense, but it pisses me off because it's incorrect. That's not how it should be. Riot is directly paid in Bitcoin. So the price of Riot should be significantly more correlated to Bitcoin than the equity markets, but I don't make the rules around here. The market is the market, and that's what the market's dictating, unfortunately. Hopefully we do see Riot gain more correlation to Bitcoin, and Bitcoin break correlation to equities. Okay, so there's a few moving pieces in my bullish argument for Riot. I want to get this point off right now. I'm still very bullish on Riot, Mara, Overstock, Hive, so many of these crypto plays long term. It's just the short term that kind of worries me, especially considering I'm extremely bearish on equities right now, as I've said many times already. Okay, so Riot, for me to be once again like bullish, short to medium term bullish. We will have to break through this downtrend right here. If we can safely break the $350 level, close a daily above 350, I'm very short to medium term bullish on RIOT. We'll take a quick look at Mara real quick. So Mara has seen even a more significant pullback. It did break out of this downtrend officially. So I mean, and Mara's already seen a retracement all the way back down to its initial highs prior to that gap up. So I think I mean, I'm not personally adding to Mara yet, just because again, when the equity markets tank, you just don't know what can happen, which is what sketches me out. I do still hold a pretty significant Mara position, I will say that, but I'm very bullish on the upside of Mara. Right, I think Mara has a lot more upside than downside right now. I'll just leave that there. We'll cover that more in the future. So let's move on to Tesla and Tesla Nikola. Nikola had some very bad news today, you guys. Not going to look at the article, but Nikola allegedly a short firm. So they're analysts who specialize in finding the flaws of companies so their firm can short them, which is great because that really exposes some of the shadier companies. Like that's how Luckin Coffee was defrauded. Like Luckin Coffee, the Chinese Starbucks, they were found out to be completely fraudulent, and that was through one of these short selling firms. So I mean, they do kind of a net positive. They're good. They're a net positive for the world, although they do bank on companies tanking. But again, Nikola pretty much dictated by the short firm to be completely fraudulent. The founder, Trevor, whatever his name is, a complete liar, like lied about their hydrogen technology. I shouldn't be trying to talk about this like I'm super confident in what I'm saying right now. I know the highlights, you guys. Maybe we'll cover it in a future stock talk on the EV sector. But bad news for Nikola. We'll take a look at that after. So Tesla, I haven't changed this drawing on Tesla at all, so pretty closely following what I expected. Again, you see we bounced off this trend line, but again, you guys, Tesla has just ripped so much. I couldn't be more confident that this is a bubble that is popping right now, that is in the process of popping. I've seen so many charts like this, exactly like this in the past, and I know a pop when I see when I think this is popping. I expect Tesla to come down over the course of the next, I would honestly call it like max 2 weeks. See Tesla come down to like the 190 region, around this area it was back in late June, and its previous highs at the beginning of the year. So it wouldn't surprise me in the least to see Tesla come down to 190. And understand that, guys, I'm banking on that. I do have Tesla puts currently. So Nikola is, I mean, it completely just wiped out all the gains it had since that GM news. Again, great GM news. I still think that's bullish news, fundamentally. CEO, a liar or not, you still sealed a contract with GM, and they're still going to make some sick trucks. So I'm still bullish on Nikola, to be honest. I'm not buying. I'll be honest with you guys there. I'm not buying right now just because the short term is so uncertain. But I'm bullish long term on Nikola. So I might establish a little stock position again. Not the most bullish on Nikola. That's why I'm not trading it personally. But I'm still bullish. I'm still bullish long term. Honestly, more than I would way rather buy Nikola shares right now than Tesla shares. I'll say that. So Workhorse, we'll take a look at Workhorse real quick. So Workhorse did rally. You saw it down 5% today. So Workhorse is just seeing a pullback, you guys. That's not, again, nothing goes straight up. This is nothing new. So I personally did close out a little bit of my Workhorse position today. I'll tell you guys that much. I do still have a solid position, but I did close out a little bit of it today just because, I mean, I still think it can do well. This might just be a pullback, and it's obviously proved that it can diverge from the equity markets. Like yesterday, it did extremely well while the equity markets, the greater markets, tanked. So that's bullish in itself. But yeah, I mean, you guys, especially if Workhorse seals that USPS contract, then I mean, it's freaking Workhorse to the moon. I wouldn't be surprised to see it at least 2x, up 100%, up to the $50 region if they announce a successful contract and like an actual valid contract. So that's that. Let's take a look quickly at Moderna. This is the only stock we'll look at today in this sector. So Moderna, I do think it's pretty likely that we come up to retest this downtrend line on Moderna. That would bring it to about the $62, $63 region. If we can break above that, like if we close a daily right now above, I mean, actually it depends when. If we can close a daily, I mean, above $70, definitely above $70, super safe bet there. Close daily above $70, I think it's a pretty straight shot, to be honest, up to like the $85 to $90 region. Okay, so that's those. AMD, I mean, you can see everything's pulling back. AMD chip makers, I'm actually very, I'm long-term, but if we see this correction, I might consider picking up some AMD shares personally. I've roasted them in the past. I think they have been overvalued many times in the past, but I just saw the new Xbox. Huge gamer, you guys. I will buy the Xbox Series X as soon as that bad boy comes out. That's sick. Day Power, AMD is supplying all the processors, all the chips for the new Xbox, as well as the PS4s, or PS5s, I'm sorry. So that is extremely bullish. I think those are going to sell like hotcakes. So the 5G sector, I think I saw Kramer as well talk about Marvell, saying that's the #1 5G play in his book. He's always talked about that. Everyone's biased, you guys. He's biased for Marvell, to be completely transparent. And that's one thing I've learned about Kramer. Kramer is an extremely biased dude. So take these with a grain of salt, you guys. We still have to go over this. I still haven't gone over this with you guys. But we'll do this. We'll take a look at these, the rest of whatever I want to talk to you guys about, which is not really. We'll take a look at Apple quick. Apple, Amazon, Apple. I mean, all of these. So I haven't changed this drawing for a while. Like since, I can't even remember the last time. Obviously a few days ago. But Apple, I definitely believe Apple will ultimately pull back and retest this line of support. We'll probably bounce off this line of support. But again, you guys, Apple, like Tesla, has seen such unprecedented growth with such like little tangible fundamental gain. Like they're not making significantly more profits than they were last year, yet the stock is like 3x'd. Okay, so I think Apple, to be completely honest, ultimately will retrace at least to the $100 region at the very least, at these highs it set back in July. But I think it's more likely, to be honest, that Apple will pulls back to its highs at the beginning of the year around the $80 region, the now $80 region after the stock split. Okay, so that's that, you guys. I want to touch on, I wish I touched on this in the beginning. I've completely forgot about this, sorry. We'll touch on this though, because I guess this can kind of prime for the video tomorrow. So once again, I will release a video tomorrow. I have a bunch of cool articles and just talking points ready for you guys. Again, covering the fundamental, my fundamental bearishness as opposed to my technical bearishness. So once again, as markets face a notoriously rough month, Jim Cramer says it's good to have some cash. Given that September tends to be a nightmarish month, it's good to have some cash, CNBC's Jim Cramer said. The S&P 500 dating back to the 1940s has declined on average 0.5% in the month of September, according to CFRA research, and the presidential election may bring more uncertainty to the market. If we hadn't sold so much stock for the charitable trust, today would have been a horror show, he said. So this is very important, okay? Again, you guys, history doesn't repeat itself, but it always rhymes. And every September, not when the world is melting, not when the world economy is melting, has done bad. So what do you think is going to happen now? I know the Fed's printing trillions whenever. You can't fight the Fed. I don't care. I think that the Fed will lose at some point. I honestly think that's stupid to say right now. I think that's irrational. I think that along with the election, you guys, if you haven't watched the video I posted talking about the election crash, go watch that, because I do also reference what has happened historically. Like every big crash that we've had in modern market history has happened during an election. So 2008 financial crisis, like, shoot, I can't reference all of them right now, but go watch the video, please. I talked about it in there. But you guys, like the perfect storm. Once again, I think there's the perfect like shitstorm, to be completely honest. The perfect shitstorm for the markets to tank this month. I think we'll see a significant correction this month. And once again, you guys, I always recommend having a solid cash stack on your person at all times. Like never play with what you can't afford to lose. And that's extremely important for you guys to remember. But let's read through these guys, and then I'll continue my rant. The market has posted big gains, and September is a tough month for equities. 2, the risk reward at current levels is precarious, as forecasted by technical analyst Carly Garner. 3, lawmakers in Washington can't come to an agreement on a new stimulus spending. So this is one of the articles I'm covering tomorrow. We can't establish a freaking new stimulus package. That's terrible. No more helicopter money means no more like risk-free buyers. When you're getting free money, it doesn't feel as bad to just blow it in the stock market and try to trade it. But when people realize that they actually need money, they're going to sell out of their positions. When they're actually losing money, when they start losing money and realize that no more money is coming, that is bad. That's bad news. 4, stocks have come down hard, but not necessarily cheap. Yeah, so again, you guys, even remember, after this week's retracement, stocks are still at so ridiculously overvalued in my mind. Still, like Tesla and Apple are still by far at all-time highs, even after this whatever 20% retracement they've both seen. So that, I mean, sketch. 5, the oil and banking industries are facing tough challenges. Oil and banks are the most like ground level infrastructure of our economies, and if they're having a bad time, that's bad. Like everything, those are kind of like, if you have like the food pyramid, you guys know that. they're kind of at the bottom. They're at the base. The banking industry is the pillar of all financial markets. And if the banking industry sees some tough times, maybe even not, I don't think it'll collapse. I don't think that'll be allowed to happen. But if they need to be bailed out significantly more, if they pull an '08, then I think that we're in even more trouble than we already are. Okay, so you guys, I really just, even if you're not bearish, just please be cautious. Please be cautious about buying right now. Even if you don't want to sell, that's perfectly fine. Practice some strong hands. I always preach strong hands. But please, you guys, be cautious if you're considering buying right now. Maybe just wait. Not financial advice, you guys. I'm not Nostradamus. I don't know exactly what's going to happen. But please, maybe just wait until the election passes to buy more, unless they're puts. And once again, you guys, if you want to know exactly which puts I have, check out my complete portfolio. Now, you guys, I do actually have a lot of positions that I'm very, very bullish on. They are put positions. There's some call positions as well. If you guys are part of the Wave Sam, you guys would know what I'm talking about there. But again, you guys, if you do want to know exactly how I'm currently trading what I believe will be a very significant correction in the markets, complete portfolio, daily newsletter, first link in the description. I really appreciate of you. I really appreciate it if you check it out. And yeah, until next time, you guys, always drop a comment. Please drop a comment down below. Let me know what you think about this. Let me know if you think I'm crazy for fighting the Fed, for thinking there's going to be another significant pullback, or what literally anything that you may have to talk about, because I always love talking to you guys. Always love talking shop with you guys. Always love learning from you guys. That's the main thing. So please drop a comment down below. Look forward to seeing you downstairs. And until next time, you guys, always remember, take action, make waves. Peace.